Hi everybody, Marco Carbajo here from businesscreditblogger.com. Today's blog post, we're going to talk about using personal credit cards for business. More importantly, we're going to talk about the 5 reasons you should stop using personal credit cards for business expenses or business purchases. And most importantly is we're going to give you the solution. We're going to give you the alternative to using your personal credit cards. So let's get started. The first and foremost is the reason why, number one, you don't want to use your personal credit cards for business is credit utilization. Now, what exactly does that mean? Now, on an individual credit, as you know, that one of the major factors that determine your credit score that FICO uses, which is one of the major credit scoring systems used, is the amount of debt that you carry, your credit utilization. So on utilization, what we mean by is the amount of credit available and then the debt that you carry. That's the difference. Okay, so if you're at, let's say you have $10,000 in credit and you owe $5,000 on that $10,000, then you have 50% credit utilization. As you probably heard, that over 50% is where you don't want to be. So if you're using personal credit cards for business expenses, then if you're making a major purchase for the business or you're charging things on your personal credit cards for the business, which should be just used for you as an individual, then what happens is that utilization on your credit is going to increase and it's going to impact you as an individual personally. So your business purchases, any debts that you carry on your personal credit cards that are business related are going to have a negative impact on your credit utilization as an individual, as you personally. So you want to separate that. You don't want your business purchases, your business debts that you carry on credit cards showing up on your personal credit or even being reported on a personal credit card. So what's the solution? Number one is you want to get a business credit cards that only report to the business credit reporting agencies. That's number one. Number two is you obviously want to have cards that give you high enough credit limits for the business and also that have good interest rates. So there's ways to do that, which we're going to get into at the end of this video. So the second reason you don't want to use personal credit cards for business expenses and purchases is the fact that it has a negative impact on your personal credit rating. So because it impacts your credit utilization, it's also going to impact on your credit scores. But also if, let's say, things in business get slow, you go through a rough patch and you can't afford to make your minimum monthly payment on the credit card that you use for a business purchase, and this is a personal credit card, then what happens is you're going to be late on that payment. So due to your business having a challenge, then you personally experience the same challenge on your personal credit report because you may be late on a personal credit card payment as a result of a business purchase or business debts reporting on your personal credit. So that's where your business is actually impacting you personally. The third thing that you want to do is stop using personal credit cards is that commingles your personal and business expenses. This is a no-no. And what that means is when you commingle personal and business expenses, it risks the protection that you get for the corporate veil. When you have a corporation or a limited liability company, you have liability protection because that business entity is treated as a separate legal entity in and of itself. When you start commingling your expenses or commingling personal and business funding or business funds or expenses or credit, then you put that company at risk because what happens is one of the most largest litigated issues in corporate law is what's known as the alter ego theory. And what that means is creditors try to prove to the courts that the business was not a legitimate business in the fact that the individual business owner commingled their personal and their business. So if they can prove that, then you put that protection at risk. So that's why it's not good to use personal credit cards for your business because you're commingling your expenses, okay? And this also makes it this is the next reason is number 4 is it makes it a mess during tax time. And it also makes it a mess for your bookkeeper if you have a bookkeeper who does your taxes because you have to itemize and go through your personal credit card statements to identify which ones are personal and which ones are business. Now, the solution to that is if you have a business credit card that's strictly for the business, then all the purchases on that card are business related. So that's why you don't want to commingle, and that's why you don't want to put your business at risk by having a personal credit card for all your expenses on your business. Finally, the last thing is that it doesn't build your company's business credit. So if you're using a personal credit card right now for your business, stop doing that, okay? Especially if you want to start building up the credit worthiness of your company. Because right now, as you know, if you don't have a business credit file, you don't have a business credit rating, then banks, lenders, suppliers, the only thing they can assess the credit worthiness of your business is you, the individual, the business owner. So that's why they have to pull your personal credit. That's why they may ask for personal references, etc. How do you start weighing in on the credit worthiness of your business? Is your company has to have its own credit identity. Okay, so when you get business credit cards through our UBF program, we get you 4 to 5 business credit cards in your company's name that reports only to the business credit reporting agencies. Okay, so this will help you do all the things we're talking about. It'll help you separate your expenses. It'll prevent you from commingling your expenses. It'll also uphold the integrity of your corporate veil because you have complete separation. It'll make it simple during tax time. It'll also protect your personal credit because none of the expenses and the debts that you carry on your business credit card show up on your personal credit. And finally, these cards report only to the business credit agency. So you're going to accomplish all 5 of those things you're going to address by getting the cards, 4 to 5 business credit cards through our business credit card program, where you can find more information on that at businessfundingengine.com. And we would be happy to pre-qualify you for that. So those are the 5 key reasons why you should stop using personal credit cards for business and get 4 to 5 business credit cards, or even 1 business credit card in your company's name. That'll help you uphold the integrity of your corporation or limited liability company, while at the same time build the credit worthiness of your business. Now, if you like this video, be sure to click like and subscribe to our YouTube channel as well. You get more videos like this. And check us out, businesscreditblogger.com. With that, make it a great day. We'll talk to you real soon.